Hi there, this is Kishore Mohan and welcome to my YouTube channel. So, today's category will be on wealth and I'm talking about a topic called diversified investments based on article I read from Economic Times Market. So, let's get into the video. If you read the title of the video, it says it's stupid to buy only stocks, and this was told by Nitin Kamath, the founder of Zerodha, one of the India's biggest brokerage. I saw this article in ET Markets, so I went and saw read about a few things and why what he said was correct. So this is what the video is about, and I will tell you what is diversified investments and what he's trying to say and why it is useful for us. Diversified investment or diversified portfolio basically means a low risk investment plan with highest possible returns with a mixture of or a combination of asset allocation. That is, it can be stocks, it can be bonds, it can be commodities. Basically, a mixture of asset allocation. Like you have different assets, which is basically it can be any kind of security like bonds, like stocks, real estate, it can be gold, etc. So the collection of this portfolio, balanced portfolio, is called as diversified investment or diversified portfolio. Basically, which reduces your risk to particular asset and also have a highest return possible. So that's diversified investments. In the article, Nitin Kamath was interviewed and he says regarding the current market structure and how investor should plan his investment portfolio. So, if you see the current market trend, there's COVID still going on. We don't know there's a comeback in China. There's inflation going on. There's Fed hiking the interest rates. Ukraine Russia war is going on. Lot of factors to be accounted for, and there's a huge confusion going on, and markets are going randomly. There's a huge volatility going on. So Nitin Kamath says it's literally stupidity to invest only in stocks. People seeing the bull run, that is huge jump in market where suddenly prices go up, the share market is going, like people will be saying, oh, the share market is giving huge profits, lot of this, especially post COVID. It zoomed too much. There's a bull market. So people seeing this think there's only investment is stocks, which is completely wrong. You need a diversified portfolio or diversified investment plan where you invest in commodities, real estate, bonds, government securities, stocks, lot of things. I'll just quote what Nitin Kamath says. We don't know if COVID has gone away. It's making a comeback in China. There's inflation. There could be many second and third order effects of liquidity apart from inflation itself. And we are still dependent on foreign flows into the country. And there are some foreigners which are taking money away from India. There's a geopolitical tension, and if the war escalates tomorrow, there's a problem. So this is what Nitin Kamath says. So this is why he emphasizes us to have a diversified portfolio. Imagine people investing only in stocks, and there's one war, it goes down. Then there's one COVID, it goes down. But what if you had gold? What if you had real estate? What if you had only real estate? Imagine when COVID went, people left their homes, the rate fell hugely and market fell huge. But if you had gold, you'd have a backup. And if you had bonds, which is fixed income, a good balanced mutual fund, you would be saved, right? So that is what basically is diversified investment plan. So I'll just say you a few asset allocation in diversified investment. One is stocks, which you already know. Then we have bonds and ETFs, exchange traded funds. In bonds, we have government bonds, corporate bonds, etc. with fixed income, with fixed interest rate annually. Then you have retirement fund is also important, especially if you are in a young age, and gold or silver, basically commodities. These 5 to 6 categories basically make your diversified portfolio. So look into this and choose a balanced portfolio. I personally, my experience, I choose a plan regarding using my age. That is, I'm 26, almost 26. So if you are in the age category of like 25 to 30, 70% of your investment plan should be in stocks. That is, you can have a 70% exposure to equity. The remaining 30%, that is your age, keep them for safer bets like gold, like bonds. I usually invest in gold, bonds, and 70% in equity. So that's how we have to balance. If you are age group of 50, you are nearing your retirement, so have more exposure to a retirement fund, gold, basically safer options, and just 40% to 30% in stocks. So that's how you make your portfolio. Seeing your age, seeing your earning capacity, risk exposure. So risk management, diversification is very, very necessary for an investor. So keep this in mind. In the last 2 years, the number of retail investors has literally doubled. And just last month, that is January, like January, February, almost we had 34 new demat accounts. Imagine the rush into the stock market by new people, new investors. Well, we are welcoming people to invest more in stocks, but you have to diversify. Stocks is not the only answer. You have to have a diversified investment plan. Nitin Kamath says that trading is not for everyone. Not everyone can be a musician. Not everyone can be a football player, right? It has to be, few things are in genes too. Like you have that, yes, it's a learnable skill, but just seeing the stock market, the bull run after the COVID, you just can't leave your job and go into trading completely. Start as a part-time trader and have an investment portfolio too, not just trading. Then slowly, if you know that you can do trading completely, then you can quit your jobs and come for trading. But people right away jump, and people had made a lot of losses, and these stories will not be covered in the news. Remember that not everyone are making profits. There's just few people that are making profits. Out of 100, maybe 2 can become a good perfect trader. But an investor, you can be a good investor. You just need to have patience and a balanced portfolio. Nitin Kamath says the number of participation in stock market, especially in India, has gone up significantly, and people think making money in stock market is very easy, and it is only a matter of time this can be corrected, and you'll face a big, huge blow on your face, literally. So have patience, make an investment plan, and if you want to be a trader, just see if you have that what it means to be a trader. Okay, so that's a wrap, guys. Hope it was a useful video. All the best. Make a good, smart investment plan. See you. Bye bye. Take care.